Hey everyone, I just wrapped up a long day of work, so if I seem a little frazzled, that is because I've finished up a long day of work. But that's not going to stop me from recording a video about Bitcoin. So why I needed Bitcoin, and you probably do too. So I want to tell the quick story. So I probably first heard about Bitcoin in 2014 off a CNN news article or something and just ignored it because it was, a million new technologies come down the pike every year. And I had a lot going on with Baumgar Corporation, etc. So came back around in 2017, which was when I bought my first Bitcoin. Bitcoin was all in the news because it had gone on a massive bull run, meaning an up run, up to $19,000 in 2017. And so I actually started reading about it. I thought, wow, this thing's still around. I better go figure out what this thing is. And figured it ultimately came to the conclusion that it was really cool technology. I ought to buy some. So I did. Medium about, not a ton, but enough to matter. And then I got distracted with politics and public policy and a million other things. So anyway, the real need and the real sort of, when I went deep down the rabbit hole of Bitcoin, really started probably the second half of 2021. So at that time, there was all this money that had been printed as a result of COVID. Most of my liquid assets were in the stock market, stocks, bonds, basically in the exact same sort of 60-40 or 70-30, whatever portfolio that everybody was in, or a lot of people are still in. And and it was going up, but it was just kind of going up with the stock market. So I should say not just the stock market, it was going up at the rate of the money printing. So I'm like, okay, my portfolio is up 15%. But the government printed 15% more money. So if you don't know how money printing works, you think I'm up 15%. If you do know how money printing works, you think, yeah, but I don't actually, I have no more purchasing power because inflation has taken away all of that upside. So it was, second half of 2021 that I really started thinking, wait, something is wrong here with the economy. Like, they keep printing money, assets keep going up, but they're going up just because of the money printing, and everything seems to really start, had been for years getting out of balance, but after COVID really seemed just like, the whole economy was starting to run on very bad economics. I guess I would put it that way. So I started looking around. I was like, okay, I've got this money in, traditional investments, but I really don't feel good about it. I think the whole traditional financial system is going to crash. It hasn't yet, although I still think that's, around the corner. We'll see. But I thought it was going to crash. So I started going through the list of what I could do with this. Okay, so let's go through the list. One, I can keep it in US dollar cash. Obviously, that made no sense because the federal government was printing tons of US dollar cash. So that was definitely going to lose money year over year, which ultimately it did with significant inflation in 2022 or whenever it was. So anyway, keeping it in currencies does not make any sense. Okay, what about real estate? Well, the problem with real estate is you have to pay maintenance costs, you have to pay property taxes, and also the real estate all seems like it's in a big bubble right now. So I'm like, well, I don't want to buy real estate because it all seems inflated in value. And as people always say, you make money on real estate when you buy it, not when you sell it. As in, if you don't buy something at a good deal, it's hard to make money by selling it to somebody down the road. So I looked at, real estate, and I ultimately did not like any of the commercial or residential real estate options. So I was like, okay, I don't like real estate as an asset. I don't like currency or money as an asset class because the government has screwed that up by printing way too much of it. I don't like real estate as an asset class because everybody has been forced into real estate using it as an investment because they can't keep their money in money. So as a result of that, that's pumped up the price of real estate. And, then again, you have the maintenance costs, you've got, everything that goes with real estate. And I didn't want to do that. So I thought, okay, not currencies, not real estate. Okay, well, what about stocks and bonds? Well, stocks and bonds have the same problem where everybody, because of interest rates at the time were quite low, everybody was just driving the price of all the stocks and bonds up. And 493 of the S&P 500 were basically flat. And 7 of them, which ultimately were the Magnificent Seven, were really doing sort of gangbusters. But again, who wants to buy a stock when it seems like it's just going through the roof? Like, you tend to want to buy things when they're on sale or they seem, undervalued, not when it's this euphoric craziness. So I looked at real estate, I looked at currencies, I looked at stocks, I looked at bonds. I didn't like any of it. I looked at gold, but ultimately came to the conclusion that gold was an old technology And I ultimately bought a little bit of gold and never liked it. I was like, I can't use this to buy stuff. It's hard to store. It's not divisible. It's hard to authenticate that I really own. Like, how do I know I own the gold I own? Like, how do I know there's not tungsten on the inside of it? Well, I could take it to somebody and have them authenticate the gold, but now when I want to sell it, somebody's going to have to authenticate that I did not put tungsten inside the gold. So gold is an asset class. I bought some just to see if I liked it, but ultimately after doing the research concluded that I just really didn't like gold as an asset class. And I thought it was old technology and it did not meet the needs of a modern, digital financial system. So anyway, after I worked my way through all of those other asset classes, ultimately Bitcoin was literally the only thing left. Bitcoin was like, okay, I need something that is scarce. I need something that solves a real world problem, in this case, the problem of money itself, and something that is not sort of epically inflated because, people are chasing some store of value. So Bitcoin as a whole was very early in its adoption cycle and still is. Bitcoin in 2022 and 2023 was in a significant price correction. So, you could buy it at what I considered a discount, and I still think it's on sale today. And anyway, so I started buying Bitcoin, and then the deeper I got into researching it, the better and better and better it all looked. So ultimately, I came to the conclusion that on a risk-reward basis, Bitcoin is by far the best investment you could possibly make. There are no maintenance costs. There is no property taxes. Obviously, you have to pay capital gains tax if you sell it for a price higher than you bought it, but that's the case for any asset. That's not unique to Bitcoin. That's literally any asset you could possibly buy works that way. So I came to the conclusion that it solved all of the problems. It was a technology that was early in its adoption cycle, which it still is. Its value had not been inflated into insanity, as almost every other asset, I would argue, is right now. And it doesn't have the maintenance cost and the property tax costs and all of those that plague other asset classes. So I came to the conclusion that Bitcoin is an ideal investment. Now, so that's why about 96% of my entire liquid net worth is invested in Bitcoin. The other 4% is stocks and bonds and basically stuff that any random financial advisor would tell you to buy. So the stuff that sort of any financial advisor would tell you to buy, I have about 4% in. I have about 96% in Bitcoin. Okay. So the question is, will Bitcoin always be a good investment? And the answer is, at some point, if it plays out the way I predict, let's call it 50 years from now, Bitcoin will not be an investment. It will be money. Because as an asset goes through the process of monetization, eventually it arrives. And when it arrives in a place where it is the monetary system of the world. It has absorbed tens of trillions or hundreds of trillions of dollars in value, and then it has stabilized. So what will happen at that point? Well, at that point, when Bitcoin is the new monetary system of the world, the appreciation in purchasing power will be about 2 to 3% per year. The reason for that is human productivity and population growth and all of that goes up at about 2% to 3% per year. As a result of that, if you have a monetary system that is finite in supply, but productivity is going up 2 to 3% a year, that means the total goods and services you could buy with that money goes up by 2% to 3% a year. So most people in the future will keep a substantial amount of their assets in money, i.e. Bitcoin, because it's a risk-free return. Now, people would say, well, treasury bonds are a risk-free return. And of course, they're not risk-free because they have all sorts of problems. What happens if the Fed raises interest rates? What happens if they lower interest rates? Like, there's a huge amount of risk that comes with owning treasury bonds, including default risk, that does not come with owning Bitcoin. So first of all, you get sort of a risk-free return of purchasing power of 2 to 3% per year when Bitcoin is fully monetized. But also at that point, very importantly, we don't have boom and bust cycles anymore. The boom and bust cycles of the early 90s or the 2000s or the the 2008 housing bust, all of that was a function of the manipulation of the money supply by the Federal Reserve. When Bitcoin is fully monetized, meaning it is the default monetary system of the world, you won't have those boom and bust cycles, which means assets like real estate, stocks, and bonds will be fairly valued. They will not be in bubbles caused by cheap interest rates and money printing, which will mean you will actually be able to invest in things that are appropriately priced, not manipulated by the money supply, and you'll be able to get a return accordingly. So let's fast forward to 50 years from now or 51 years from now. Let's say the year is 2075. It's currently 2024. So, 51 years from now is 2075. So in 2075, if Bitcoin is the default monetary system of the world, you will not have the boom bust cycles. You will be able to decide what percent of my assets do I want to keep in Bitcoin, which increase in purchasing power by 2 to 3% per year, and what percent do I want to allocate in other assets to try to get more than 2% or 2% or 3% per year, but with risk. And you might want to invest in real estate or stocks or bonds or a variety of other things in the year 2075. But if you do invest in those things, it'll at least be, you'll be able to invest in assets that are not mispriced the way they are right now as a result of federal government money printing. And you will not be forced into investing in those assets just so you don't lose money, because you'll be able to get 2 to 3%, 2% to 3% increase in purchasing power just by sitting on Bitcoin, because that will be the increase in the monetary unit when it's not being inflated. So summary of all this is I found Bitcoin because I had to, because the other assets I could invest in were not good investments by my own calculation. I did not want to go through a massive crash in those other assets without the upside. Not that you don't get ups and downsides in Bitcoin, but at least the upsides in Bitcoin far exceed the potential downsides in Bitcoin. And so anyway, so it was the only asset that I thought I could invest in that would have a positive impact on my finances, that had a better risk-reward profile than all of the other available options. And I believe all of that is true today. So if you have assets that you are looking to invest, I continue to believe that real estate is not a great asset class to invest in right now. Maybe at the bottom of a massive worldwide recession, you can buy some real estate, for the cheap, on the cheap, but that does not seem to be right now to me. Certainly stocks and bonds do not seem on sale to me right now, so I don't think having money in stocks and bonds makes sense, other than whatever, in my case, small amount of money you're diversifying outside of Bitcoin, which for me is 4% and 96% Bitcoin and 4% everything else. But anyway, so that is my thought process. That's what really got me deep down the Bitcoin rabbit hole, is a necessity of wanting to invest in something I felt good about, and going through real estate, stocks, bonds, gold, and every other asset class, and concluding that those were not where I wanted to keep my assets. And ultimately, Bitcoin, this amazing new technology that's very early in its adoption cycle with a finite supply, was exactly where I wanted to keep the vast majority of my liquid net worth, which is right where it is. So Bitcoin right now is at $63,000, 63,000. Strikes me as a fantastic buying opportunity. It's been sort of in the $60,000 price range for most of the last couple of months. And typically in a big bull market, once it does this for a few months, at some point it breaks out and you get huge moves to the upside. And obviously I'm looking forward to that, since that's where I have the vast majority of my assets. So if you want to know any more about Bitcoin or have any questions, text me 601-207-0813. Happy to answer questions by text or on Facebook Messenger, or post them as comments to this video, and I will do videos about anything you have questions about. Always here to serve in your Bitcoin journey if there's anything I can do for you. Thanks.